Hi everyone, this is Vas from City Estates. Thought I'd share a few thoughts based on conversations I've had with my own clients about the market as of today, which is March 29th, 2022. So a lot of chatter in terms of what to do. Is the market going down? It seems like there's a lot of slowdown all around. What does that mean? Here's what I can tell you based on conversations and statistics I've pulled up from Broker Bay based on information available to us right now. So the outskirts, meaning, and I'm speaking mostly for GTA East and Toronto, where I operate. Starting with Bowmanville, I have a client that recently sold a home for close to 10 to 15% below most recent comps because the offers just weren't there. So there's a slowdown definitely in showings, but the offers are also reflecting exactly that. As we're moving closer to Toronto, I feel Whitby is the second one in line where I'm seeing good properties still go for a decent amount of money. So we're not breaking any records, but we're stable. However, offers are way down, showings are way down, tons of terminations, tons of relistings. Sellers appear nervous. So there are deals to be had. As we move closer to Toronto, similar things, Markham, Toronto, again, good properties move fairly quickly. However, anything that is less than ideal usually sits and ends up getting relisted or terminated and taken off the market. Downtown condos, the trend is a little bit different here. So this is where I feel we might have some stability. Condos have been the ones to gain the least amount during COVID, especially if they were downtown. Prices are holding steady. Actually, in some cases they're creeping up, but offers definitely way down. Now, I don't have rhyme or reason to explain this in terms of fundamental analysis or technical analysis. The way I see everything playing out right now is the market is based entirely on sentiment. What does that mean? Well, if you look at your gas bill, and I mean that by gasoline for your car, now you're going back to work, you're commuting more. I know I feel it personally. We're spending a lot more between groceries, gas, just everything else. It seems everything is up at least 15-20% all around, and I'm feeling it in our monthly bills. And I'm not one to penny pinch or track every single penny, but I'm seeing it, I'm noticing it. Speaking of which, in March, my stager, my painter, my cleaner, my inspector, everybody raised their rates except my photographer. He's probably watching this. He's gonna raise rates soon too, I hope. So yeah, sentiment is changing, people are feeling it. And at the end it begs the question, what does this all mean? Well, I'm not one to make predictions, and I'm not gonna start now. However, what I see playing out is as follows. So generally speaking, for every 1% rate hike increase, we see a 10% decline in purchasing power, which generally reflects in 10% lower house prices. So where does that bring us? That brings us back to late 2021 numbers. So hardly a crash, a bit of a correction, yes, but that's what it means. The biggest question I get now from clients, it's typically, well, hey, I was pre-approved at below 3% in February or March, and now I'm looking to close on something quickly because my pre-approval ends in end of April or middle of May. And they're asking, what should they do? Should they jump now? Or should they risk waiting? What if prices go up? What if they go down? And again, this is something you have to make the decision on your own. Nobody can make that decision for you. But as we're seeing it right now, there's going to be a bit of a rush of people trying to do this exact same thing. They're going to try to lock in these lower interest rates at the sake of possibly paying the current market premium if they're not able to get a deal. And the rest of the people are likely going to wait. And once we're in May and June, what is most likely to happen is we're going to have probably more stable prices, maybe something we're going to be trading sideways. But I think people are going to be able to get a much better deal in terms of getting more value for their money and not having to compete with a bunch of other people making irrational and highly emotional decisions. So that's where I see things headed. Again, I'm not here to make predictions. This is just based on data and the sentiment that we're currently seeing from buyer behavior and the way sellers have started to adjust their expectations.